Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com gives us the lowdown on the major equity markets and comments on how the oil patch is doing and on what companies are doing the best weathering the economic storm. Trends Journal publisher Gerald Celente says we're about to enter the biggest depression the world has ever seen. He believes the chaos will lead to economic collapse and even war. Vancouver realtor Steve Saretsky tells us about what's happening to the real estate market since the coronavirus crisis hit and what we can expect in the future. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can also find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Good to be with you, Jim.
Ross, was it a miserable week on the equity markets?
Yeah, a week ago we had that outside reversal week to the upside. Everybody was beginning to feel a little bit more comfortable, but when you get as oversold as we were, normally what you get is what we call an automatic rally, an AR. And that just takes care of some of the excess. You get usually, you're going to retrace typically up to about 38%, a nice Fibonacci number, which we did. The good indices managed to get up right to their 20-week moving or the 20-day moving averages, and then got a real lid on themselves the first part of the week. By the end of the week, starting to erode away again. So this is, it's part of a consolidation phase, and I think we're just right now maybe into the first quarter of that consolidation. You inevitably are going to see the markets give back a good maybe 60% of the rally off the bottom that we had back on March the 20th and 23rd. So that comes down to sort of a test of a low, then probably get back and retest the top end of the range we've had in this last week or so. Might take that out marginally, and would ideally look for an overbought reading there. And all of this that I'm outlining here is what we've seen most times after you've had a climactic decline such as we saw during February and March. It's you go through a bit of a thrashing phase. The market will try and establish some kind of a bottom from which it can make a recovery. And you want to start looking to see which stocks, which indices are holding the best, which ones are having trouble. I mean, clearly, the small caps, the Russell 2000, had one of the poorest recoveries, made back just shy of 30% of the loss. And it's sitting right now around the lows that we had back in 2016. So that's, you got to go back 4 years ago now. So it's given back all of that. You look at the S&P or the Dow, they're flirting around the lows we saw in 2018 or 2017. So a little bit more buoyancy there, but still not good. The best ones are what you would expect, the consumer staples, what people, what you need to have. You need to have your toilet paper and your cleansers, all of that. So the Cloroxes and Johnson & Johnsons, et cetera, they recovered pretty darn well, and they are holding at or above the 2018 lows. So that's, I think going to be the name of the game here for many months, until things start to look like the COVID-19 has a chance of rolling over and seeing some pause as far as both the infection rate and the death rates are concerned. So we got quite a process ahead of us here.
China says that its economy has started to boom again. Can we believe anything coming out of there?
Well, those numbers are always questionable. Clearly, I guess we should be looking at the satellite photographs to see what kind of pollution levels are coming from there right now. But Apple and Foxconn are talking about gearing up. Those names we can probably believe because we can see the numbers. But I'm always questionable when it comes to bigger numbers that you look at purchasing managers index and things like that out of China. I would rather just look at the markets and say, what's happening there. And at this point, if I look at something like the A shares in China, they didn't break as badly as we saw the U.S. markets and European markets break. And so as an example, the ETF there dropped from 30.5 to 24.5. It's sitting around 26 right now. So in a span of this last calendar quarter. So reasonable buoyancy as far as that's concerned, but really no big signs of life. As I say, I'm more interested in looking for other opportunities in markets that I can believe the stats that might be coming out. And clearly, is there a firm out there these days that hasn't pulled back all of their earnings projections? Because nobody knows what this next 6 months has in store for them.
Canada admitting that some informal chats are taking place with OPEC. Apparently the U.S. also taking part in them. Is that good news for the energy patch?
Well, it's good news in terms of helping get the price back a bit. But, we're talking, the oil price,
Western Canada Select.
Well, the Western Canada Select, that's what's come from $4 and change, or maybe just under 4 back to 11. But nobody's making money at 11. And even the West Texas crude has come from 20 to 28 and change. There's a long way to go before anybody's starting to make any money at all here. And the question becomes that if they want to bring prices up by dropping the production levels, how are they going to get everybody to join in with them? I mean, for the Russians and the Saudis to do it, that's one thing. They've got control over their production. But, you look at the U.S., how are you going to go around to all these individual companies and say, you've got to cut back? There's no way that they're going to be able to do that. So, I question how good the bounce will be here in the oil market. Some of the bigger names in Canada, the Canadian Natural Resources or Suncor, have come up nicely off their bottoms. They're already into oversold or overbought territory. So I think that even the big names, which are always the first ones to see money come into them, they're going to get pretty tired here fairly quickly. The small names, the ones that have that real juice to them when they come off the bottom, I think you're going to see them still pause in here before they have a chance to rally, because we need to see a sustained move as far as the oil price is concerned. Then there might be, these bargains that are out there may actually start moving, but the one lesson I've learned over the years is, and learned it the hard way, trade the most oversold ones for the very short-lived rally. If you want to have a longer-term investment, go with the strong names in the sector.
The Canadian dollar, is it holding up relatively well?
Surprisingly so. I mean, it had a pretty good week. closed, up a cent and a half off the lows here, and that some of that being reflected, I guess, in the fact that the oil market has been a little bit better. There's a long way for that Canadian dollar to go before you can say that there's a bottom end. As I mentioned previously, you typically want to follow the trend when it comes to currencies. And, I think anything maybe within the next cent or so on the upside becomes pretty big overhead resistance for the Canadian dollar.
Ross, are there any stocks that are holding up really well here despite the major market downturn?
Yeah, well, without a doubt. I mean, you look at, two names that are still being able to sell product and having people come in their stores. Walmart and Costco have given back very little off their highs. Got that initial selling where everybody was just in a panic that third week of March, but stability in those two has kicked in really well. You've got stocks like Akamai, Gilead, Lilly, we got a list of maybe a dozen names or so that people can take a look at, because you've got to remember there are certain products that people still will need, and think of the internet. Think of companies like Zoom. People are learning to communicate much more using that interface, and it's better than the telephone. You've got that face-to-face contact. So definitely names out there to be looking at.
Ross, thank you so much for chatting with us.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him also on Twitter at Charts by Ross. Coming up, Gerald Celente, next on This Week in Money.
Always consult your investment professional before making any investment decision.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Gerald Celente, publisher of the Trends Journal, online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Well, thank you.
Gerald, you'll recall a year ago your forecast was for the Greatest Depression. Well, where are we now?
The Greatest Depression has begun. We're going through times like we've never seen before. There's nothing in history to compare to this. And as we're speaking, we're looking at half the world's population closed down, some 4 billion people. So, more than half. This is unprecedented. It's not going to snap back. You're going to see businesses going bankrupt. A lot of businesses are on the edge already. And again, you look at the data, and we write about it in detail in the Trends Journal weekly. You go back to the end of 2019, the last quarter, and you're seeing a recession going on in Mexico. The GDP growth in Europe was the grand total of 0.1%. Slowing down across the globe. Car sales in the tank in India, China, and many parts around the world. One country after another slipping into recession. Australia, their GDP going down, central banks lowering interest rates long before this happened. And this has made a very bad situation monumentally worse.
In a politically correct world, are depressions categorized now as recessions or long recessions?
Well, they'll make up anything they want, and this is very important. As you may know from getting the Trends Journal, when this panic broke out, the coronavirus panic, right away we started talking about the economic implications. And it's only within the last 2 weeks that the major media started really talking about the implications. They talked about the stock markets, they talked about other things, but not about all the people out of work, all the people unable to pay their bills, their rent, their mortgages, their phone bills, their heating bills, their auto bills, insurance, and on and on and on and on and on. So they'll make up anything that they want. And when you look at most of the media, they're calling this a steep recession. And again, these are the people that didn't see what was coming in terms of what were the implications of this going to be. And now they're the ones being expert on it. It's kind of like how they lead you into war and there is no exit strategy. The same exact thing has happened with this. And as we see it, this is a made-for-TV blockbuster movie, COVID-19, 2020. And you go back to our trends journals going back to January. One of the headlines was Coronavirus, 106 dead in China, 1.4 billion still alive. The new black plague with a question mark. So I'm mentioning that to show you how they were hyping this right from the beginning and what less than 4,000 people in China have died. And of course they'll say, Celente, they lie about their numbers. Okay, so they lie about them. But, 5 million haven't died. And 5 million out of 1.4 billion still wouldn't be a lot.
So we're hearing the coronavirus being described as a pandemic. Some say it could be, just an overblown hoax. What do you think it is?
Well, I don't think it's a hoax. I think it's, as I said, it's a media. This is like these same prostitutes, as I call them. They get paid to put out by their corporate pimps and government whoremasters. It's like when there's a hurricane or a storm coming. They all get dressed up in their hurricane drag. And there's a hurricane 300 miles off the coast of Miami. And they got the wind blowing and the water coming over the boardwalk. And they're freaking everybody out. This is what they do. It's a reality show. I mean, look at the big news over here. Chris Cuomo on CNN got the flu. What the hell do I care? Why is it such a big deal that he has? Oh, and by the way, he's at home. How come he's at home? What's going on? When you look at the people that are dying, all the facts are there. One of the biggest places they're dying is in Louisiana, around in New Orleans. The obesity epidemic over there. That's what it is. And again, I'm not making this up. The facts are there. People with diabetes, lung disorders, elderly that are chronically ill before. And, that's the way we see it. This is it's a made for TV action movie.
Is closing down the world an authoritarian's dream?
Oh, well, rights are lost. There are no rights anymore. You got these little governors and mayors and senators or this and that telling you what to do. Follow my orders. I mean, it's all over the world. The Stasi is back in Germany. People are, it's about what it is now. People ratting everybody else out all over the place. Reporting to the police. It's a total government takeover. Just like they, Heil Hitler, march to Mussolini, salute Stalin, again, Macron over in France, Merkel, the little guy you got up there, everybody marching to orders. And they just, I'm a Yankee Doodle dandy, Yankee Doodle do or die. Just like George Bush and all the rest of them sent the people to war based on lies, it's the same political freak show to me. Just different freaks. Same family of freaks, just different freaks. It's like this Trudeau, another guy born on first base and thought he hit a triple. Another nobody, like the guy we got over here in New York, Cuomo. A daddy's boy, names the Tappan Zee Bridge after his daddy, Mario. Hey, what is your father better than mine? What do you think? His little brother Chrissy or him would be anywhere if Daddy didn't get him there? I mean, when are people going to grow up? Again, at the worst thing, they're saying maybe 200,000 people will die in America. Okay, 80,000 died of the flu? You close down the whole country? And you know what these politicians are going to do when these numbers come in low? They're going to see what a great job we did? See what a great job we did?
Is shutting down the world economy for the coronavirus overkill?
Yes, as I said, they're going to kill more people shutting it down. How are they going to pay their rent? How are they going to pay their bills? You're going to see divorces. You're going to see suicides. You're going to crime. You haven't seen anything yet. When people lose everything and have nothing left to lose, they lose it. They're closing down Africa. There's hardly any virus there at all. Kenya don't have anybody. South Africa. All these regimes that were having blowback. It was one of our top trends for 2020. New World Disorder. Hey, they closed down everything. Now there's no disorder. Chile, remember what was going on? How about Hong Kong? Don't hear about that anymore. Hey, what about France? One of the longest strikes going on and going on. Yeah, forget the strikes. Can't leave your house unless you have a piece of paper that says you can. A little Catson Macron, a little nobody, a Rothschild's boy. Follow your leaders.
Does it make sense to deploy the U.S. military to combat the virus, and could there be something bigger going on that's hiding?
Again, it's getting the people used to the military. And by the way, it was Obama that did away with the Posse Comitatus Act that prevented the military to come into the states unless there was, a threat. And they're perfectly equipped to handle this. I mean, they're geniuses in this. These guys haven't won a war since, World War II? If it wasn't for the Russians, they wouldn't have won at all. And now they're going to fix this thing? And people looking up to politicians to fix this? How can anybody be so stupid? Show me one good thing the political system has done. One. And they're going to fix this? You got this little clown over there to hold a hand job, whatever his name is, down in Maryland, closing down the whole place. You get fined like $3,000 if you leave your house. 16 people died out of a population of 6 million people? How many people got shot in Baltimore last night? How about the 9 million people that die each year of air pollution? 1.5 million of tuberculosis. Hey, how about the 1 million people that Americans killed, along with the Canadians and the Iraqi, the UK and others that sent soldiers over there to slaughter innocent people? Afghanistan, only a couple of million. Libya, when you add them all up, in Syria. Hey, how about what's going on in Yemen? Oh yeah, you mean the Ebola crisis, the cholera crisis, the 10 million people that are starving because of the United States and the other countries giving the Saudi gang the armaments to kill them? Who cares about the Yemenis? We got, how many people you got in Canada that have died? Let's see. 173. And what's your population? Only about 38 million. The numbers add up to nothing. Oh yes, Celente, but it's gonna get worse. Alright, how much worse? 1,000? 2,000? 5,000? And you shut down the whole country? You got political morons, imbeciles, psychopaths, sociopaths, destroying the global economy at levels that we've never seen, and now I got a bunch of people telling me it's going to come back. Yeah. You want to go masturbate, do it at home.
Is the coronavirus turning out to be a war against the people?
That's what I said it is. The governments have taken over. Heil Hitler!
The so-called fake news media has been lying to us for years. Why should we believe them when it comes to the coronavirus?
Why should anybody believe the whole system? Look, people call themselves Democrats or Republicans in this country. Now grow up. They'll believe anything. What do you think Disney World does so great for? As I said, this is a made-for-TV action movie. People don't think for themselves. Again, it's all over the world. What war did you like the best? World War II? Maybe World War I was your favorite. Yeah, how about the, Crimean War? What about the Peloponnesian War? I mean, people march off to war, they follow their leaders. Nothing new.
With diminishing audiences and now diminishing advertising revenues, what do you see ahead for the mainstream media?
Oh, after this, it's gone. It's gone. The print media. Our magazine does well. We're a subscription base. We never have depended on advertisers. But all the other ones depend on advertisers. And even in the TV, they're getting, more people watching. Same thing with Facebook and all the others. They got more people watching, but the advertisers aren't advertising. Or the auto dealers are going to advertise? How about the restaurants? Oh yeah, they're going to advertise. I mean, come on, nobody's going to advertise. You're going to see more businesses go bust than you could ever believe. This is unprecedented in world history.
When the U.S. and world economies reopen, could the stock markets move substantially higher?
No, because you're going to see losses like you've never seen before. You're going to see earnings. They're going to hold back earnings reports. That guy freaked everybody out. Everybody, social distancing. How about making up some numbers? I say a meter. I say 2 meters. I say screw you. Come up with some scientific data. And now people are going to be afraid to go to restaurants. They're going to be afraid to socialize. They're going to be afraid to go into concerts. They're going to be afraid to go into stadiums. It's one after another. The tourism industry.
With the shutdown of the world economies and fear in the streets, could gold and silver be exploding to the upside?
Yes. And when you're seeing why gold and silver, look, the demand for physical gold is off the charts. You can't get it in a lot of places. The point about why the prices aren't higher right now is simply, very simply, because people are losing a ton of money in the markets, and they're selling their positions, and they got to cover losses, so they're bailing out of gold. End of story. I see gold having the potential to go to way beyond $2,000 an ounce, and I also see the strong potential of the governments confiscating it, doing everything they can to do it, and you can see the power of the government, and anybody that thinks they won't do it in a flash of an eye, they better grow up. All they have to do is look back to 1933 in America when FDR banned gold, and you had to turn it all in.
We'll have more with Gerald Celente when This Week in Money returns.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Gerald Celente. Gerald, are we likely to see price deflation in a number of areas going forward?
Absolutely. Real estate, one of them. Automobiles, artwork, antiques. Think of all the product. Think of all the winter product. Think of all the winter product that's locked up in stores, and all the other products locked up in stores that are not allowed to be open. Then think of all the product that's made that hasn't been sold, that hasn't been delivered. You're going to see prices go, so many areas go way down. But then there's the other side to it, and that is the currencies are going down in many places. The reason the dollar is so strong is because the other currencies are so weak. So you're going to see a lot of inflation. So even though prices go down, it's going to cost you more to buy them in a lot of places.
What could the corona effect be on real estate?
Oh, it's going to hurt real estate. There's no question about it. And again, with people out of work, how are they going to buy new houses? You're seeing the numbers going off already. And it's going to hurt real estate dramatically, and you're already starting to see it happen. So why is it going to bounce back? You can lower interest rates more, but it's not going to do much at all.
Is the corona effect likely to severely damage some sectors of the economy long term?
Yeah, as I mentioned, people are going to be afraid to go into restaurants. They're going to be afraid to go into the concerts. Like I said, yeah, it's changing people's mentality. This is going to wear on for a while.
Is the debt bubble threatening to burst?
Oh yeah. And now they keep adding more and more debt from developed to undeveloped nations. Of course it's going to burst. And it's already bursting in a lot of sectors. Let's take energy, for example. You're starting to see companies already going under. The corporate debt bubble has been long warned about, not only by us, by the IMF, the World Bank, the Organization of Economic Cooperation and Development, the corporate debt bubble that has been built up with. We have over a $250 trillion debt bubble globally. Everybody was borrowing all this money cheaply, all these mergers and acquisitions, all the stock buybacks. Oh yeah, the debt. This thing is going to, again. We are going into the greatest depression like we've never seen. Cannot even imagine it. You go back to 1930, there were 2 billion people on the planet. Now we only added 5.7 billion in 90 years. And you already saw all this new world disorder, people trying to escape wars, crime, violence, corruption, one after another. But by the way, closed borders aren't going to be an issue anymore. They're going to stay closed. That ended that issue. Oh, by the way, climate change, no one's talking about that one anymore either.
Is the flight to safety focusing on the U.S. dollar instead of gold and silver?
It's easier, and the other reason is that a lot of countries, it's really the same thing. The companies are running the countries. They're holding dollar debt, and their currencies are going down so strongly. So temporarily the dollar, and I've been saying this, virtually 90% of the economists were saying over the last 2 years that the dollar was going to weaken, and I said absolutely not, because the other currencies are in much worse shape. But now, with the government of the United States printing all this cheap money, there's going to be a reversal at some point. It's going to explode downward. But right now the dollar is the only game in town.
Could negative interest rates stimulate the economy after the panic's over?
No, because it was already known that negative rates and more monetary stimulus was not going to boost the sagging economies, and they would need much more fiscal stimulus, and only that was going to only do a little bit. Again, this is slowing down before this happened. We had forecast the greatest depression would happen in 2021. As you well know on your show, I was saying the United States would be into negative zero interest rate policy by October 2020. Well, now it's been sped up because of the panic that the politicians caused with the coronavirus, and now you're there already. And it's not going to do anything. People are broke. How are they going to borrow? Restaurant business in the best of times is only good, and one business after another. Again, and now you have all the tenants not paying their rent, whether it's in commercial or otherwise, whether it's rentals. What are they going to do? Oh, we're going to give you a 90-day reprieval. Great. What are you going to do after 90 days? How are you going to pay it? How am I going to pay my water bills? How am I going to the property owners, the landlords? How are they going to pay their mortgages? How are they going to pay their taxes with no money coming in?
Are alcohol and marijuana sales increasing as the virus panic continues?
Yeah. And again, that shows you the hypocrisy of these slimy, low-life, piece of crap, garbage, disgusting politicians. Go back to the United States in 1933. They lifted prohibition. These are the same scum that put prohibition on. Now they lift it. Why they lift it? Because we'll tax the hell out of alcohol so we get a lot of money, because politicians don't have to work. They don't have to worry about paying their bills because they steal our money in the name of taxes. These same slimy lowlives ruin the lives of probably hundreds of millions of people over the decades because they smoke a joint or sold one, and then they make it legal. And we put a lot of regulations on it, and we're going to take a big cut of the taxes. So that's why they're letting that as an essential business now. You can sell booze and you can sell cannabis, because the low-life scum politicians who never work a day in their life and been sucking off the public tit their whole life, they get their money in taxes. They steal, that's stealing money in the name of taxes. So yeah, it's going to do good business because people want to, they're going to be very depressed and they're going to drink themselves into alcoholism more, and they want to get high to feel better.
Do the IMF and the World Bank serve a useful purpose?
No. The only purpose they do is they serve is to keep the gangster banksters in business. Jesus Christ, the Prince of Peace, for which I'm a warrior of the Prince of Peace, this is the only time he became violent, when he drove out the banksters out of the temple. Violent. So if anybody says Celente's raising their voice, take it easy. I don't like to see my rights stolen from me. Maybe you do. Maybe you like being a slave to low-life politicians. Not my trip.
Could we be seeing bank holidays ahead? And I think that might be forgiveness of debts or payments.
No, you see a bank holiday so they could steal your money. They'll make you turn in your gold, and they'll readjust their currency and make up something new. One of our top top story in the Trends Journal 2 weeks ago was we're going to go from dirty cash to digital trash. You know, don't touch that money, it's filthy. Don't touch that money, it's filthy. So we're going to go digital. We're going to go digital so we know every penny that you spent. And we're going to come up with a new currency because our old one isn't worth anything because it kept printing it and printing it out of nothing. But now we got to pretend like we're not in that kind of debt, so we're going to come up with a new currency.
Do you think they would love to have a new cryptocurrency because then they could tax every transaction?
Yes, they're going to. That's what I said. They're going to have. They're going to have a new currency, and they're going to be able to know every transaction that you made, where it came from, where you spent it, so they know all about it.
Will the coronavirus panic provide an opportunity to repatriate a number of manufacturing businesses?
Yes, it will. Self-sustaining economies are going to be very important.
In Canada, the price of Western Canadian Select oil fell so low it costs more to buy a cup of coffee than it did a barrel of Canadian oil. What are your thoughts on the crude oil market?
Well, again, it's supply and demand. The demand's going to go way down. And, of course, they're doing everything they can now to push the price up. Isn't that great? The governments get involved to artificially raise the price so the oil producers can make more money. Isn't that terrific? Isn't that wonderful? You know, they talk about this jerk that was running, Bernie Sanders. He's going to turn it into a socialist country. Socialist? What are you talking about, socialism? You had it already coming already. You know, it's capitalism, socialism, forget it. It's socialism for the rich. It's socialism for the corporations. And it's capitalism for we the workers.
What's the latest in health news?
Well, the health news is you're going to start seeing more and more natural healing. Again, you talked about cannabis. You know, that's another thing. You know, there are a lot of medical benefits to it. So we're going to see more and more people going to a whole health healing. And, of course, they're also going to push vaccinations on everybody, just like they have in the United States. It's very important, by the way. There was a lot of legislation during these primary campaigns for people to vote in their states whether or not they wanted to get vaccinated. And then Rosie, queen of coronavirus, showed up and poof, that was gone, man. Everybody, vaccinate me up. Oh, I believe in the government. I believe in what they tell me. Yeah. So now you're going to see more and more people getting vaccinated.
What's your latest globalnomic view?
Oh, it's Greatest Depression. History is repeating itself. Very simple. Very, very simple. And we'll tell you what's going to come next. Currency wars, trade wars, Great Depression, World War, currency wars, trade wars, Greatest Depression, World War III. History is repeating itself. It's in front of everybody's eyes. Again, before this was happening, in the Trends Journal, we detailed all of what was going on in India, in Hong Kong, in France, in Lebanon, in Chile, in Bolivia, in Colombia, in South Africa, one country after another, people taking to the streets, riots, demonstrations like I'd never seen in my life before. Never. And now this. And now they're locking down and clamping down on everybody. When people lose everything and have nothing left to lose, they lose it. And they're going to lose it big time. And then what the countries are going to do, the slimy, low-life, murderous politicians, they're already doing it in the United States, but they took out that guy Soleimani. He was going to be an essential threat, which turned out to be a big lie like all of the other ones, the Iranian general. They'll make up a lie, and they'll give it as an excuse to attack another country. It's the beginning of World War III. And you're already seeing how the governments take complete control of their country, instilling fear and terror in the people's minds, and the people follow their orders. So that's what I see coming. That's the globalnomic view. War.
What's the latest on Occupy Peace?
Who cares about peace? Nobody cares about peace. No, nothing. It's very quiet. We had one kind gentleman, may his soul rest in peace, Neil Anderson, sent us a very, very generous contribution. And that's the only way we could get going on this. Look at that little low-life piece of garbage crap, former mayor in New York, Bloomberg, little Mikey Bloomberg. I'm running for president of the United States. Billionaire Bloomberg spent almost $1 billion in 100 days. 900 and something million dollars. got nowhere. Could you imagine if the billionaires gave $1 billion apiece? These pieces of garbage? Then we'd have something. People better start putting money into peace because their lives are going to be on the line. They just lost all their liberty. Stay in your house. And boy, do these cops get off on it, man. Now they can't bust your chops for having one drink over the limit of 0.006. So now, because they can't bust your chops for that, boy, they're into this one big time. You people better grow up. Grow up. How stupid of me to say that.
Gerald, how can people find out more about the Trends Journal?
No, just go to trendsjournal.com, trendsjournal.com. There's no other magazine like it. Look, what's going on is unprecedented in world history. If you want to know what's next, you want to see history before it happens and prepare, prevail, and prosper, then you might want to consider the Trends Journal. If not, stay tuned to the mainstream news and get more dumber by the second.
Gerald, thank you so much for being on This Week in Money.
Oh, and thank you.
My guest has been Gerald Celente, publisher of the TrendsJournal.com. He was speaking to us from historic Kingston, New York. Coming up, Steve Saretsky, next on This Week in Money.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. Welcome back to the show, Steve.
Yeah, thanks for having me on.
Steve, is the coronavirus panic likely to cause home prices to drop?
Well, yeah, I think that's probably the logical conclusion. Obviously, remains to be seen how far policymakers are willing to go and obviously what the recovery looks like. But, when people don't have jobs, as we're seeing, I think 2.3 million Canadians already have filed for some sort of employment insurance. That's a huge headwind for, housing, right? At the end of the day, most people need mortgages to qualify for housing, and you can't qualify for a mortgage if you don't have a job. So it really just comes down to, how long it takes for companies to get back up on their feet and rehiring. And I think that, in my personal view is I think it's going to be a prolonged period of time, probably longer than most people expect. And so I think that, ultimately is going to be a headwind, for the real estate market.
Sure. If you look at, other past pandemics, and I guess the Spanish flu 100 years ago is the best example, people were told to stay home then. The incidence of the disease went down. Then they'll go back out and they get a secondary wave of infections and have to be locked down again. So, yeah, it will go in waves. We'll be locked in for a couple of months, be let out for a bit, and then have to stay back inside again.
Yeah, I think it's basically like, the longer that this kind of drags on, like if it's, whether that's, you're in quarantine and you're shut down for another month or 2 months or, maybe, God forbid, 3 months. I just think that the longer that drags on, the longer it's going to scar the economy. And, I think just the longer it takes to get back up on its feet. And I think some people I find are a little bit naive in terms of thinking that you can simply just pause an economy and just hit the start button and everything's back to normal. So, I think this is going to have lasting effects.
Sure. Small businesses, I think about a third of them in a survey said they didn't think they'd survive this, and small businesses provide 70% of our jobs. Yeah,
and there's, obviously, I think policymakers are trying to do their thing, but I think like, the Canadian government, we can talk about some of the things they brought in, right? Okay, so they're going to subsidize 75% of wages, but hey, if there's no cash flow coming in because you're shut down, like it's kind of irrelevant. Same thing, if you're going to provide a interest-free business loan, again, like that might help, but if there's no cash flow, I just don't see how that's going to work for a lot of these companies. So,
Are HELOCs likely to play a role in this downturn?
Well, I mean, they've been tapped into, at a pretty impressive rate in Canada. So, I think that Canadians are obviously came into this. The problem is that, Canadian households in particular came into this, in particularly vulnerable shape. You have elevated levels of household indebtedness, the most in the G7. We never went through the pain or took the medicine in 2008. So, in comes this, exogenous shock. And now obviously, it makes it that much more difficult to try to weather that storm when you have basically no savings and, extreme amount of indebtedness. So, if you look at statistics are, drawn HELOC balances in the U.S. are equivalent to 1.9% of GDP. In Canada, that number is 11% of GDP. So Canadians have been tapping into their home equity through home equity lines of credit, and that's been, propelling consumer spending, which makes up, about 65% of GDP. So basically, long story short, is this whole good chunk of the Canadian economy is dependent on the consumer, and which is vice versa dependent on house equity. So it's a very precarious situation.
People who've been using their homes as an ATM are really going to regret it, aren't they?
Yeah, unfortunately. The problem is that, these dire warnings, when people sort of sound the alarm for what's been now 10 years, I think that it begins to fall on deaf ears. And so, everybody's talking about, well, we have a debt problem and, eventually house prices will correct and this will be a problem. And people just kind of ignored that because, every year prices continue to go up and go up. And so it was kind of like this risk off trade. And, we saw the same thing when CMHC's Evan Siddall brought in the mortgage stress test and along with OSFI and there's a lot of pushback on that, saying, well, why don't we need this? Why should we be told how much we can and cannot borrow? Why should we have this arbitrary, limit on how much credit can be extended? And, I think that what we're going to probably realize now was why these policy measures, were brought in. They were brought in to protect Canadians from themselves, because, I think a lot of people just don't have the financial willpower to resist or to have the prudence of actually setting their own budgets and, practicing financial prudence.
Steve, are foreign owners likely to hold on to their properties?
That's kind of a wild card, to be honest. I don't really know how that's going to play out. I don't think anybody does. You certainly hear people in the industry want to believe that, and I think it's certainly a logical explanation is that, if the Canadian dollar gets whacked around, which seems pretty likely, if that drops down to 65 cents, maybe that attracts in some foreign investment potentially. I think that's one scenario. I think personally, as crazy as it may sound right now, but if you have a meaningful decline in house prices, I think the governments are going to be forced, or maybe not forced, but I think that they're going to be inclined to remove things like speculation taxes and foreign buyer taxes to try to attract foreign capital to sort of try to reinflate the housing market. Now, again, you can argue that that's the right thing or wrong thing to do. The reality is that's just how politics and politicians, what they do is they go back to the things that have always worked, which is let's drive housing up and create a wealth effect. And, that's been the main source of, it's in the BC, British Columbia economy. I think it's between real estate finance and insurance, it's about 25% of GDP. So
I was just going to ask, do we need a speculation tax and a foreign buyer's tax in a situation like we're in right now?
I think politically it's going to be a hard one to remove. Obviously our market was in, the amount of capital flooding in here in 2015 and 2016 obviously distorted prices and arguably made our system more vulnerable now to a shock and to a pullback because obviously, that capital came in, and then locals basically tried to keep up. So what they did is they just took on more leverage to try to compete with the offshore bid. And now we're kind of left with, a stockpile of debt and really high house prices and, now an economy that's basically now on pause. So I don't know. I think that, the foreign buyers tax, when you have, personally, I'm out of the view of when you have, central banks, desire to leave interest rates basically at 0% or close to it for over a decade, that kind of extreme monetary policy requires extreme, fiscal policy or extreme, government policy to sort of counteract that. So I personally am in the camp that I think those kind of taxes are almost kind of needed. Otherwise, you do get, real estate trading as basically it is ultimately become a financial safe haven. Where else do investors park their cash when, savings rates or, yields on safer, bonds or whatever, is yielding almost nothing. You almost just plow your money into real estate. So, yeah, I actually think that those are probably needed policies just because of how insane things are on the monetary side.
Will this downturn cause people to price their homes to market in the hope of attracting buyers?
In terms of reducing their prices?
Yes.
Yeah, so I think that, I think over time that's going to be the case, right? So, if I to sort of guess, I think that, there's no question that there's people out there that need to sell for various reasons, whether that's, divorces, which I'm sure are going to go up after this is all said and done. You're going to have people in financial distress that need the cash, need to liquidate. Maybe they can't afford to carry their mortgage anymore. We obviously, I think everyone can agree that foreclosures will go up, despite banks deferring for 6 months. It just kind of delays the inevitable. So these are going to be forced liquidations and obviously they're going to be forced liquidations in what's most likely to be a pretty depressed environment. So I suspect that, it's going to tip in that favor, that you'll have people, obviously cutting their prices and trying to sell into somewhat of a bad market.
Is it likely going to be tough to find buyers?
I think again, that's a bit of a wild card. Obviously Vancouver, we know, has been very historically resilient, but I think that ultimately, employment is going to be the key driver. When does that bounce back? How long does it bounce back? I think it's going to be some time. So I personally see an environment where right now, in the next 2 to 3 months, you're going to see a market that's virtually, for the most part, is on pause. Very little sales, very little new listings. But once the market, eventually resumes, those listings that were delayed will come onto the market. And then, yes, there's going to be some buyers that maybe were waiting for this to sort of clear out. At the end of the day, I think a lot of the buyers that maybe were planning to purchase are not going to be in a position to purchase because of employment changes or what have you, right? I mean, even if someone goes from, let's say they got laid off $100,000 job and maybe they find a new job, but it's only for $85,000. I mean, that's again a huge dent for a lot of people. So we're gonna have to wait and see, obviously, how that shapes up over the next 6 to 12 months. But I suspect that it's not going to be a simple V-shaped recovery like everybody is clinging to.
We'll have more with Steve Saretsky right after the break.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. Speaking with Steve Saretsky. Steve, is the coronavirus panic likely to cause pent-up demand in the housing market for buyers or sellers?
Well, again, I think we kind of discussed that. I don't know. I think there's going to be some obviously pent-up buyers that maybe were hoping to buy in March or April. I think some of them that were maybe pent up won't have jobs when this, eventually resumes. So I think a lot of those buyers will drop off. I think, you have to think of Vancouver as it is predominantly, a big chunk of it is sort of an investor-driven market. So these aren't necessarily people that are inclined to purchase. So yes, I think that they'll certainly be more enticed to purchase as prices come down 10, 15, 20, 25%. No doubt about it. But if you're looking as an investor that's maybe agnostic to asset classes, if you look at the stock market that's down, say 30%, or do you buy, Vancouver real estate that's fully priced? To me, the answer is pretty easy. So I suspect that, like most asset classes that are currently being repriced, eventually I think this residential real estate market will have to be repriced, to what price that is is anybody's guess, but I think that, no doubt that there's going to have to be some movement.
Are some listings being pulled from the market?
Yeah, for sure. Obviously, particularly for a primary residence, like a family that's trying to sell their family home, and they're not overly keen on having a whole bunch of people coming through, given the health situation. So seeing a lot of that, getting pulled off. New listings have dropped off by about roughly, in the last week or so, they've dropped off about 50%. So, those are getting obviously pulled back significantly. Basically, like the people that are kind of in the market right now, the people that are listing their house right now are most likely people that like have to sell, or really, really want to sell. And then same thing for buyers. Anyone buying in this market, it's probably someone that like really needs to buy, and they don't, because maybe they sold 3 months ago and they got to find a place to move. So that's basically the people that are moving in this market are obviously very serious, about their intentions. And, I think the people that are more casual lookers, investors, that sort of thing are obviously on the sidelines.
Are mortgages likely to be tougher to qualify for going forward?
Yeah, for sure. I think that we're starting to hear, bits and pieces about it. They want to look at your profession and, sort of judge what that looks like, right? So for example, like, hey, if you're a realtor and you made, $300,000 last year and, you're trying to extrapolate that forward, the bank's going to say, well, yeah, you made $300,000, each year for the last 2 years, but hey, this is looking like a pretty bad year for real estate. So, maybe we're not going to qualify based on that amount. So we're starting to hear things like that. Obviously, I think if you put yourself in the bank's perspective, it's pretty difficult to issue a mortgage in this environment because, next week you could be laid off, and that's a very realistic scenario. So the unemployment rate is obviously rising, like nothing we've ever seen before. So as a bank, how do you proactively manage your risk? And I think that they're going to obviously tighten credit standards significantly moving forward.
Is quantitative easing in Canada likely to make its way into the real estate market?
It kind of already has. The Bank of Canada is already buying Canada mortgage bonds. We have various other liquidity programs that are in play right now. CMHC brought back their insured mortgage purchase program, which is effectively buying insured and what was previously uninsured mortgages off the bank's balance sheets, and securitizing those. So that's sort of freeing up some liquidity there. So yeah, I think, in terms of helping out the banks and providing that liquidity, it's already happening. You could argue whether that's the Bank of Canada is technically doing QE on Canada mortgage bonds or not. They are dipping into the secondary market. So in my opinion, that is, a form of QE, if you call it that.
Is there a correlation between auto sales and real estate sales?
Yeah, typically speaking, they're very pro-cyclical. So, obviously when the housing market's good and your house is up by a couple $100,000, you're probably more inclined to go out and buy a new car, or, maybe even tap your home equity line of credit, to fund part of that car purchase. So they are intertwined. What we saw in March was, auto sales, in March were down, I believe, 48% on a year-over-year basis. So a huge drop-off in auto sales. I suspect that number is probably going to go lower in April, and I think that home sales will probably be very, very similar in that aspect.
When stock portfolios get hard, are people who lost money there less likely to buy real estate?
I don't know. That might be a bit of a generic extrapolation. I think that, what happened in 2001 stock market crash is actually real estate wasn't impacted at all in Vancouver or Canada for that matter. So I think the argument back then was, well, the stock market was deemed to be too volatile. And so what you saw is investors rebalance into what they deemed was maybe more of a safe asset, which was ultimately real estate. And that's kind of what got the real estate, bubble actually started in sort of, 03, 04 all the way into 07 before the real estate crash in 2008. So basically people funneled out of the stock market bubble. Interest rates got hammered down to zero. So people then obviously funneled into real estate, creating a real estate bubble before that ultimately, popped and burst. And I think that, this probably latest bubble is more of a corporate credit bubble, and that one looks like it's going to burst. So that's kind of where we are today. It's kind of a revolving door, and so yeah, I don't know. At the end of the day, this one is going to still impact real estate, but it's impossible to draw the line that just because stocks go down, real estate has to go down.
Were March sales the beginning of a decent spring market?
Yeah. January, February were ripping hot. First week and a half, 2 weeks of March were very, very hot. Lots of multiple offers. Prices were starting to go back up. Certainly for the low end, mid-range stuff, prices were definitely rising. In some cases, hitting all-time highs. So yeah, the market was, in my opinion, was in very, very good shape. In fact, it was actually concerning a lot of people in the industry that things might get a little bit too overheated, and sort of start to get away from us again. But, obviously this has put a huge stop in those tracks. And, so yeah, it's, crazy times.
RBC's predicting a 30% drop in sales. Your thoughts on that?
Well, I'm kind of curious to see what those numbers are in terms of, is it 30% for the next couple months? Is it 30% for the year? I mean, I think that, if you're asking me about sort of Greater Vancouver home sales for April, May, I suspect those are going to get cut by probably 70 or 80%. At least if you go and look at other countries or other cities, global cities that have sort of shut down and are well ahead of us. That's kind of what we saw for real estate sales there. I believe the UK has actually requested or suspended all real estate transactions. So, in some cases, even more of a problem over there. But, I suspect real estate volumes here will drop by minimum, probably 60 to 70%. And again, that obviously creates problems. Just again, like you can only imagine being someone that, let's say, over leveraged in the UK, and you desperately want to drop your property, but the government comes out and says, "No, we're freezing all transactions." That's just a recipe for disaster. And so I think, thankfully, we don't have that. But obviously, again, even for someone trying to move a property here, I think it's going to be pretty difficult. You're going to have to obviously drop your price to get some movement. So yeah, we'll see how that plays out.
Do you have any idea why the UK government did that?
I don't know. I think they cited health precautions or health reasons, but yeah, I'm not entirely sure. I mean, there's obviously some rumblings here. People were saying, well, are the lawyers going to be open? If the lawyers are working from home, how can they properly identify buyers and sellers and, court? So, I mean, like, for example, here is like, here's a recipe for disaster, in my opinion, is right now is if you have a court ordered foreclosure sale, these courts are closed, I believe, until the end of May in BC. So, if you're a lender, trying to get your money out of a deal because you've just foreclosed, you're going to be waiting until at least June just to get, resolution from the court. So, I think for a private lender, for a mortgage investment corporation that is, more susceptible to these market conditions, there's virtually no liquidity because even if you want to foreclose or are in the process of foreclosing, you're not getting that money for at least a couple months minimum. So, yeah, it's going to be very messy in that space.
Are per capita debt and mortgage debt likely to affect the recovery of Canada's economy?
Yeah, for sure it will. That's why, as I've said before, I know we've talked about it a lot on this show, and I've certainly been talking about it a lot over the last several years, is that obviously when you have these kind of levels of household indebtedness, you become more susceptible to, exogenous shocks. There's a good book written by, a couple economists, called House of Debt. That was written basically chronicling the 2008-2009 financial crisis. Basically just talks about how the buildup of debt, basically the more buildup of debt that you have, particularly in the private sector, i.e. households and corporations, is that it becomes even more difficult on the recovery side of things. So yeah, I think, if you're asking me, again, I'm maybe not the complete expert on this, but I think it's a pretty safe assumption to say if you're looking at U.S. households versus Canadian households, I think that Canada is going to be in a more difficult position, I think, coming out of this than the U.S. will, just primarily because the U.S., deleveraged a lot of their households in 2008. Obviously very painful, but, you can only kick the can down the road for so long. So I certainly worry for a lot of Canadians. I know that thankfully our banking system here, there was a lot of cohesion that they are working with policymakers to provide as much liquidity and to try to help households as much as possible. But I think at the end of the day, it will certainly help, but there's still going to be some pain, no doubt.
Are jobs lost during the pandemic likely to be there for people to return to?
I mean, I think so. I think that it's naive to think that everyone that got laid off is simply going to go back to their jobs. I think that it's going to be I think it's going to be prolonged to get businesses back up and running, particularly to full capacity. I mean, so one of the funny analogies that I heard the other day was, everybody's talking about, pent up demand. So, we should have hopefully a V-shaped recovery. But if you put like sort of a simple analogy is, let's just put an assumption. Let's just say, let's say you go out for dinner once a week. And, that's just what you do. Every Friday night you go out for dinner. And so when this passes, when this eventually comes out on the other side and you return to your normal life, is this pent up demand? Does that mean you're just going to start going for dinner 3 times a week to try to catch up for all the dinners that you missed? Or is that simply just lost revenue that you're never getting back? And, it's the same thing I can say anecdotally, hearing about friends and stuff that are, say, for example, having to they're canceling their weddings. And they're just, they're going to say, well, we're just going to get married, in our backyard or whatever, and we're going to save the money, and it is what it is. It's like, that's lost revenue. That revenue is never coming back. You could say the same thing for a vacation. Let's say you had a vacation planned. Obviously you had to cancel it. There's a good chance that you just might never rebook that vacation, particularly if your RRSP just dropped by 20-25%, your house price is down 15%. And, you're still looking for a new job, you're probably not booking that vacation. So I think this idea of sort of pent-up demand is kind of a false nomer, in my opinion.
The glass can be looked at as being either half full or half empty. Is the glass half full for real estate?
And I don't know if I share that view, personally. I mean, it depends how you look at it, right? I look at it and say, hey, listen, if you have cash on the sidelines, there's a tremendous opportunity potentially coming your way. Certainly people are obviously very upset about high house prices and unaffordability. And so I think that, hey, if you're in an industry that is not impacted by this, recession or, deep recession, whatever you want to call it, if you're not impacted by that and you have cash reserves and you have some patience, I think that could be very much a glass half full kind of thing. But on the flip side, if you're over leveraged, and you've extended yourself too much, then I think it's a half full kind of glass.
Steve, what about people who are relying on their mortgage helpers' suites to make sure that they can pay their mortgage, with so many people, especially young people, being laid off right now, the kind of people who would occupy those suites?
Yeah, I think that those are typically, as much as it pains me to say it, I think that those are kind of the most susceptible to this kind of event. Is, obviously in Vancouver we had a very tight, vacancy rate. Rents were obviously going up a lot over the last couple of years. And so, a lot of younger people particularly, and maybe people that are less well off, they were kind of almost forced into, say, a basement suite. And, basement suite prices were probably hitting all-time highs. And so, as this recession deepens and drags on and, people don't pay their rents, it's going to create opportunities for these tenants to seek, potentially some better alternatives. And I think it's going to, create, it's basically, I look at it as it's almost like it's a lower income class that's probably in the basement suite. And so they become more susceptible to being laid off, not having cash reserves. So there's a good probability that they're not going to pay, their rent. And so, yeah, that's obviously going to hit like the mom and pops that are, really dependent on that to sort of help service their mortgage. Thankfully, you can obviously defer your mortgage for 6 months. But again, like even if you think about it after the 6 months, I mean, to think that there won't be some downwards pressure on rent in general, I think that, again, it creates, so like I can only think of other cities in, Canada and the US that have gone through sort of pullbacks in the market. Typically what you saw is it was the basement suites that took the largest hit in terms of, price adjustments, because vacancies start to open up everywhere else. And so, the renter has more options and say, well, do I rent the 1 bedroom apartment for $1,600 a month, or do I get the basement suite for $1,400? I think I'll just take the apartment. So certain things like that. I mean, again, this is based on my view, my opinion, but hopefully it's not as detrimental for some of these people that are relying on that income.
Steve, thank you so much for being on the show.
Yeah, thanks for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky, a Vancouver-based realtor that you can find online at stevesaretsky.com. He's also on Twitter at Steve Saretsky. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, and Steve Saretsky. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Jim, how are you doing?
I'm doing great. Yourself?
Well, I can't complain. I haven't missed any work, and that's great.
Larry, the rest of the world might be shutting down or slowed down. You're still cranking stuff out there at American Manganese and some news releases this week.
Yes, we had a couple of news releases, and work is a little slower getting done because there's basically, small crews working in the field that we are. But we're still moving ahead one step at a time, and we think that we have a remarkable process here that the world should hear about. Our press release was, again, work for second go-around for a Tier 1 company, and it had to do with the sulphate. Instead of producing a hydroxide, we produced a sulphate from the cathode materials, and we got a 99.99% purity recycled. And that's about as high as you can get. And we're very happy with that, because what does that tell us? That tells us that our process has flexibility. We had only worked on hydroxides before, cathode to cathode, which should have been a remarkable savings for some of the battery companies out there. And I'm wondering if cathode to cathode is really what they're looking for, because they all have special chemistries when they make their cathode material up. And so we're hoping that that will take off. But in the meantime, if we have to make sulfate, we can do that too. So again, that shows the flexibility of our process. And I'm thinking that nobody else can do exactly what we're doing. We happen to have the best process out there, patented. I've seen no other patents. I haven't even seen an application for one in, 9 months, 10 months. But other people are talking about building plants, et cetera, great for them. And I don't know how that's affecting the environment unless they can get a complete closed circuit like we do. I can't see it benefiting the environment as much as our process would. But that's my thoughts, my ideas, and anybody's can rebut that if they want to. But we're happy with what we got. We've spent millions of dollars and thousands of hours with Chemetco, and the R&D is so important, and I'm not seeing other people doing that. The R&D is so important, and on coming up with a process that will fit everybody's hand, a glove that will fit everybody's hand, and that's exactly what we're trying to do. There's a lot of news, of course, about the coronavirus, and that's a very unfortunate thing. It affects everybody. It affects every moving part of the world. It affects manufacturing. It affects mining. It affects, well, you go down the list. It affects everybody, simply. In the restaurant business, the hotel business, it has a very negative effect. But, all they can do is wait for this to work its way through the system and come up with a cure, and we can get back to work and rebuild our companies and rebuild the economy. So that's a thing that we all strive for. And we've had people working from home here, even though we have a small office, and we have plowed through. So we're just hoping that everybody else is getting along out there, and all our shareholders are healthy and safe. And that's one of the main things we have. We have a lot of good attachments this time. We've attached another press release on an interview that will be aired on Bloomberg International, and it's on the Red Chip Money Report. That should be out on Sunday. So we're hoping for good results from that. And I just want to mention that, and I didn't mention this the last time, was with Zarko being appointed as a director to the company. That's a big boon for the company. He's what I consider to be now an expert in the recycling field, one of the few out there. And we're glad to have him as a director and our chief technical officer. So one of the major things I looked at was a report from Argus, and it's attached, in which they talk about China being down 55% in the EV manufacturing and battery manufacturing in January of this year. And on the other side is Tesla's best quarter yet. And that's right through to the end of March. And they've produced about 102,000 cars. So we got to take our hat off to Elon Musk and Tesla. They are the leaders in this field. And actually, there wouldn't be an electric car, as far as I'm concerned, there wouldn't be an electric car industry out there without Elon Musk and then Tesla. That's as simple as that. And so we follow everything that Elon does, everything that Tesla does, and we're glad to see that they're plowing ahead. They're going to have 4 gigafactories here soon, and so that shows the optimism and his insights on what's going to happen going down the road. And we like to follow those because he's got good instincts and good insights. So we follow him. That's a major part of our program. And we just hope that he continues on and gets more gigafactories going around the world. Back in the U.S., he's talking about a storage battery gigafactory, and that'll be interesting to follow that one through. But remember that storage batteries have lithium-ion, NMC, chemistry too, and we will be able to recycle those at some point when they reach the end of life. And so I wish everybody a great weekend, and hope that they stay home. There's even though the gas prices are low, not many people are able to take advantage of that right now because they're self-isolated. So thanks, Jim.
And Larry, for people new to American Manganese, what are you guys all about?
We're a critical metals company that is specializing in technologies that help the environment. And, we've developed a process that will be necessary for the U.S. at some point on being able to treat low grades of electrolytic manganese, or I shouldn't say electrolytic manganese, low grades of manganese, and produce electrolytic manganese metal and dioxide, and because that's all the U.S. has. We've taken that technology and morphed it into our current technology on recycling of batteries, and so it's been a good road for us to go down. All of this information can be found on our website, AmericanManganeseInc.com, or you can phone me at 778-574-4444. Email me at LREAUGH@AMYMN.com. And we're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM.
Larry, thanks for the update.
You're welcome.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on April 3rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.